The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Good afternoon, folks. If you have any questions, it's 877-927-6648. And I started the show with a picture in the Tiger TV of the Hurricane Sandy, and it shows the Fibonacci relationships of the hurricane. And most of you people know what that is. It's a picture of the spiral mirabilis that shows the ratios and proportions, and it's true in almost everything in nature, and particularly the things that we look at, which are the cycles and the planetary things. And hurricanes, being weather patterns and are natural phenomenon, they all form with these spirals. Whenever you're watching the news, if you'll watch as the hurricane forms out in the eastern part of the United States and the Atlantic, they spin, in a spiral, just like you're seeing in the picture today in the Tiger in TFNN's Tiger TV. Now in Asia, they are called typhoons. The only difference between the two is one is from Asia and the other is the eastern one. So it's the main difference. And they have number 10s in Hong Kong occasionally. I've never been in Hong Kong when we've had a typhoon, so I've been fortunate enough to be that. I've been in a hurricane or two, and I know they're bad, but frankly, nothing is worse than a tornado. I mean, I've been in many earthquakes living in California. I wanted to talk about something very unusual if you want to talk about quirks of nature. When we look at that Fibonacci spiral, I moved to California in 1965, and I bought a little house in Westlake Village, California, outside of Los Angeles, about 20 miles. And that's where we raised our family. And our phone number there, and remember, this was 1965. Our phone number there was 889-1618. And that was before I really did anything in Fibonacci. I didn't do anything in Fibonacci until about 1970. It was about 4 or 5 years later that I finally, was working on that. And, years later, I was, into Fibonacci, and I couldn't believe that was the phone number that I had during that time. And it was really, really amazing. And my extension number at Drexel was 618, and then that also was after Fibonacci, and I had no choice in that because it was just the fact that that's where my office was in the building. So it was amazing that numbers followed me around. Quite a bit. But anyway, we use that, in our trading, and I thought what we want to do is to cover some of the things that we looked at on Monday's show, and one of the main things, of course, was the gold, and we went down to that, 1697 level, which was the 61%, the 38.2% retracement, and this is what we were expecting because the market had been so strong and completed the big, AB equals CD, and that's pretty much, what's occurred. And now, we're getting ready to see, what the next legs, are going to be. I think it would be, it's a good thing to learn something, and I believe me, I learn something every day when I do these charts, and because I do a quite a bit of chart work, and I just wanted to show you what I've been watching on gold for the past, actually 48 hours, been longer than that, since last Friday. And we're having the same situation on the 30-minute chart that we're having on the daily chart, we had way back into May and June when we had these higher bottoms. And if you'll take a look into Tiger TV on this 30-minute gold chart, you'll see that this chart has had, several higher bottoms here on the 25th of October and again Sunday night. And that one came in at the 786 and also at the 61% retracement. And then you went up today, and then you made the ABCD move up at the 1725 level. So what we'd be looking for now would be looking to see if gold's going to come back one more time and make another retracement. And what we would do is we would just go back to the last major low, which we had, which was on Sunday, down around the 17 level. And that means that gold should have, if it is correct, and the trend is going to be continuing up at around 1708 would be a 786 retracement, and that would take us to the 786 retracement of the low that we made Sunday night. And the trend is still up, so that's really what you're looking for, is to try to do that. Now, I know a lot of you folks like to use oscillators and moving averages, and they can be very helpful at determining whether the market is getting ready to turn. But remember that these must be used in conjunction with other things. I mean, if you're going to use crosses of moving averages and things like that, they have to be in the context of how much money you have to risk. It's not a question of being right or wrong in these trades. It's a question of how much money you have at risk, and that's why you want to use those and as support and resistance, and for getting in and out of a market, if that's what your preference is. I basically just use the patterns. I try to keep it as simple as possible. To me, the markets don't do anything more than AB equals CD all day long, every day. It doesn't make any difference. We just went through this huge hurricane, and the markets have not changed at all. Nothing. The bonds haven't changed. Stocks haven't changed. Nothing has really changed, to make any difference in anything, that we've been seeing over the past days in the stock market and gold market and silver market. All of them are doing, the same thing that they've always done. So these are the things that we want to, keep in mind when we're doing this, that it's nothing more than, numbers, and that's why I like doing what I do, is because it's related to these numbers that I've, learned to look at. Now, since we were talking about the 382 in the gold market, I wanted to show you the same thing on a smaller market. We showed gold on the daily, and then we showed it on the 30-minute also, and now we are going to show Treasury bonds at the 30-minute, and that's also going to show that we completed a 382 retracement off of the low we made last Friday, and which would happen to be a 786 retracement, if you remember, and now we've made a 382 retracement, and we're completing that big AB equals CD up at this 149 level. And frankly, it looks like we're getting ready to go higher in the Treasury bonds, it looks like, in my opinion. And I'm saying that because of the 382 retracement again. If this market was really weak, it would have retraced down to the 61% retracement, but in fact it didn't. So it took almost a whole day, 24 hours, to make a 382 retracement, and then took out the previous highs. And that's a sign of bullishness, folks. That's not a sign of bearishness. So we need to, keep that in mind. And I'm very bearish bonds. I don't think that there's any question that there's going to be all hell is going to be paid in the bond markets across the world, because history says, that bonds are not going to be repaid. They're going to be repudiated. In other words, they're just going to be defaulted upon, or they're going to be inflation index. In other words, they'll just deflate the U.S. dollar, and they'll pay the bonds off 100 cents on the dollar, but the dollar will be only worth 12 cents. It'll be something like that. I don't know what it'll be, but it's going to be something bad. You just can't borrow money forever, and it's just not the way it is. I'm going to go back in history a little bit because we've got a break coming up. But when we were talking about the telephone that I had in Westlake Village, folks, when I was in high school, we had a party line in Terre Haute, Indiana, and there were, I believe, 10 people on a party line. And a party line, for you young folks, you picked up the telephone, and first of all, it had a ringer. You had to wind it up to get the battery to work, and get the other party on the line. And if there was somebody on the other line, you could literally pick up and listen, to whatever they were saying, and you had to take turns, and you were only supposed to take, 5 minutes at a time, to use the telephone. And now if you've ever watch when you go into a movie theater, any place where there's the public, even people that are eating dinner, they're texting either the other people. I mean, it's a joke. I mean, no one's paying attention to what's going on. Everybody is texting. And so, it's a lot different than it was, 60 years ago. But, that's the way it's supposed to be, I suppose, with technical stuff. But anyway, get back to the commodity markets. All I'm saying is this stuff has changed, quite a bit. And, it's just amazing. We were on the mass transit, the MTR, in Hong Kong last week, and Sarah said, "You have to watch this." And I said, "What do you mean?" She says, "Count the number of people that are texting." And we were on this was a sardine, because it was right during the sardine time. Those were everybody packed together, and it only takes 5 minutes to get from one place to the other. But everybody, 90% of the people were either watching a movie on their iPhone or whatever it was, or texting somebody else. I mean, everybody. The only people that weren't were myself and a couple other old people, but that's about it. Everybody else was, texting and stuff. And I think the communication part is good. I think that's wonderful. But, it's just, one of those things that you just have to get up to. I'm sorry to since this is my show, I guess I should do whatever I want. But I'm going to do one more thing for nostalgia purposes, because I'm going back in time here with all the things that have happened. But in 1955, I was a sophomore. I was in high school, freshman to sophomore, and the Dodgers were in the World Series, and the big thing at that time, this was before calculators, was the transistor radio. This was the big thing, and if you had a transistor radio, man, that was like having an iPhone back in those days. And I was in a Catholic school, Jesuit school, and what we did is we wanted to listen to the game, and so we cut out the book in the library, and we put the transistor radio in the book so that we could listen to the game, and the sister Clotilde could never figure out where the radio was. Well, unfortunately, she got frustrated, went to the principal, and we all got penalized, which we always did anyway. So, anyway, that's the end of the history lesson. So, I guess I'm getting old when I start to think of these things, but I still love these markets. Okay, let's go to the next one that we want to be watching, and that's the euro, because that has been moving quite well. As a matter of fact, I think what I want to do is I want to show this, because the same thing occurred in the euro that occurred in the Treasury bonds, and we've had we're going to have a retest here in just a minute. I have to correct these charts because I can't get them to fit on the Tiger TV unless I move them around a little bit. But you'll see that we had a really nice bottom formed in the euro at the 786 level over the last 3 days at that 128.90 level. It stopped at that 786 level 4 or 5 times, and then we had a huge run up, and then last night we had a pullback to the 382 exactly, and then the market had another 70-point run up to the 130.20 level, and now we're coming down strong. And if you'll notice when you go into Tiger TV and look at this is totally different than the last down move that we had at the 382. We're having a very strong selling coming in. We're having a wide range. We got a break here. We get back, we'll continue with the euro, and we'll talk about it on the daily basis. 877-927-6648.
TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com, where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com, or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Okay, folks, 877-927-6648. This is Larry Pesavento for TFNN. We were talking about the euro, the fact that we had the retracement at the 786 at 128.80. And then we had a big move up, and now we're starting to pull down again. The euro I posted on the long-term weekly. It is a pretty bearish chart, and I think that goes to fit in with what I think is going to happen to stocks too. But we'll have to wait and see if that's going to occur. Now, since we're talking about stocks right now, we have an interesting pattern that is formed in the E-mini S&P. And I think since it's happening right now, I'm going to put it into Tiger TV and just show you, what it is. It's a 60-minute chart going back to the beginning of August, so it covers several months. And what we're doing now is we're making a 61% retracement. As you can see, we made that last Friday at the 1392 level. And then we had the rally, after the storm and everything. But what's interesting right now is that if you were to blow this up a little bit, and we'll just look at it on a little shorter time frame, you'll see that what's happening now is that we're having a. I have to take out the. Give me 1 second here. I've got to do a little bit of housekeeping here, otherwise it will mess everything up, and I don't want to do that. Okay, let me put this out of the misery. I was just getting the chart out of the way. What I want to do now is I just wanted to show you we're setting right at the 61% retracement now in the S&P at this 1402 level. Frankly, we've already had a rally off of it, so this looks like it's a failure pattern to me. We've got a caller on the line, Ari from Florida. Are you there? How are you today?
Pretty good.
What can I do for you?
I'm in a company, DC. Can you hear me?
No, I can't hear you very well. There's a lot of static coming in. I don't know. You must be on your yacht because I can't get a very good connection.
Thompson Creek is the company, which is TC.
Okay, TC, just give me a second, and I'll add it to my portfolio here, and it only takes a second. It's trade. Oh, this is a very low-priced stock, $2.60 or something.
Largest copper.
Uh-huh. Isn't it? It's a very cheap stock at $2.60.
It's the largest copper mine, one of the largest copper mine in the world.
Okay, copper mining. This is a much weaker than a market stock. I mean, this stock, was up around $4 recently, and it's given back more than 70% of it. So it's a low risk right here. If you wanted to buy it and I wouldn't buy anything under $5 a share. But to me, it's got some support right in here at this $2.60 level, and you don't want it to go below $2.30. So your risk here is about, that's quite a bit. It's about 20% on a $2.60 stock, but it's definitely low priced. I wouldn't buy this stock. It's much weaker than the market, and it's in a very strong downtrend, and I don't think it's going to make it longer term. And most stocks under $5 do not make it over a long period of time.
They just had infusion of $750 million.
Yeah, it looks like they've gone through that pretty quick. They must have talked to Bernanke and get some more because they're going to need it. If they can't get it infused with $750 million, how much is it going to take?
It's going to be over $3 billion.
$3 billion? Okay, well, I send them your money. I'll hold mine back, okay?
Okay.
But I wouldn't touch this stock. I really wouldn't. It just doesn't look very good to me.
How about the way it's coming into the 5-year support?
Well, it has some support here. Yes, it has some support right here at the 260 level. And like I say, if you're going to buy it at 260, you can buy it there and get out of it at 230. But frankly, a stock like this, you could come in some morning and it could be trading for 88 cents. That's all I can tell you. I just don't think I wouldn't touch this stock.
Well, then I'll just watch.
Okay, just watch it, and see what happens. But, it's a much weaker than market stock area. That's the first bad sign. And copper hasn't been doing that well either, and this stock is far, far weaker than copper, so something's wrong. Either the copper's not in the ground like they say it is, or, something, because believe me, this sounds like, if it looks like a duck and smells like a duck and walks like a duck, it probably is a duck, so I would stay away from it.
I appreciate it.
All right, my friend, thanks for calling in.
Bye-bye.
Okay, bye-bye, and we have a little break here, and then we'll get back and we'll talk about the stock market index because, we were just saying that it was hit the 618 and already rallied, and now it's starting to break, and 877-927-6648.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Okay, we're back, folks. 877-927-6648, and I've been asked to announce the winner of the Great Panther Silver Giveaway, and it looks like it is Larry Pesavento of Tucson, Arizona. Oh, no, excuse me. It's James of New Mexico. He's the winner of a half ounce of silver from Great Panther. So if he'll check in with the folks at TFNN, they'll be sure that they get the prize, I'm sure. And, of course, Sarah's whacking me on the side of the head now saying, why didn't I win my silver? So anyway, what I posted into the Tiger TV while we were on a break was the E-mini S&P. We were showing it hitting the 61% retracement earlier. It was very early this morning, and now it had a very strong rally, just like it did before. You'll notice that these rallies were equal, and this is only a 5-minute chart, but it just shows you the equal rallies are still on. Anyway, that's what we're looking at. It looks like the S&P is going to go down to 1398. Now, someone asked a question during the break about the full moon, because we had the full moon on the 29th, and we're several days out into that now, and we should have had a rally, but the problem was that the market was closed because of a hurricane, and that we have no control over that. That just happens. Whether the cycles will work or not, during that time, we really don't know. But what it looks like is that any influence that the full moon has dissipated, because the market should be a lot stronger than it is. I mean, it got up to 1418, late last night, and has given all of it back. And so that's really, a very bad, very bad sign in my opinion. Okay, we've got a caller from San Jose, California. I think that could be San Jose, Costa Rica too. Steve, are you there?
Yes, I am. It's San Jose, California.
Okay, good. What can I do for you, my friend?
Well, I noticed that Home Depot had a little storm pop today, and I'm wondering how the chart looks, whether or not you think it'll tag the 1999 highs.
Okay, just give me a second to pull it up. You know, I'm basically a futures and Forex trader, so stocks I look at on request, and which is pretty good because, you know, frankly, you get a technical picture of it. And, this is very interesting because, you know, we have, we had a pretty good correction here over the last few days, and then with the news today, this is very interesting because this stock is going to have a real difficult time running away from the high that it made. And in fact, we made a perfect ABCD this morning on the high. I'll put this into the room. Hold it. I've got to mark what it is, otherwise people will not know, and then I'll get too many emails. Home Depot, just a second. HD. I always used to think that was Harley Davidson, but I found out later that it wasn't, because Harley Davidson is HOG. And, okay, we put this up. Okay, now what you're going to see in the Tiger TV is you're going to see a very distinct AB equals CD pattern that almost makes a perfect double top with the October high. And this looks like, to me, like a news pop. You went up and you took out the highs of last week. You completed an ABCD pattern. The market's already below, far below the low of the day. The high of the day. So this looks to me like this was just an emotional pop that everybody in the whole world wanted to go to Home Depot or Lowe's to, buy stuff for the storm. And, whether that's true or not, that's why I don't listen to the news because, the market will tell me what it's going to do most of the time. Does that help?
The downtrend still intact then?
Well, this thing's been really strong. The last move down stopped exactly at the 786 at that 59.41 level. The trend is still strong until it takes out 59.41. If it gets below 59.41, this stock's going to have not just some problems; it's going to have a lot of problems. But right now, this has been an incredibly strong stock. Look at this stock. This stock, since 2009, this stock has more than tripled in value. You could hardly say that this is a weak stock. It's just that it's making an ABCD today. But if you look at the long-term picture of this stock, since it bottomed in 2009 at 17, now it's 3 times that price at 61. Actually, 4 times that price almost. So that's a big move.
Oh no, it's been great.
Yeah. Just watch 59.50. If it gets below that, it's going to have big problems because it's never. If you look at the chart, Steve, this thing is never taken out on the longer term picture. Has never taken out the previous lows. It just keeps going higher and higher and higher, and that's the definition of an uptrend.
So
all I'm saying is this
change on the low is the support, and 63 and change is the high water mark.
Yeah, I don't think it's going to run away from the 63 level because of that ABCD pattern there. It's going to have to do some more work, and if we get below 59.40, then it's going to have some problems. But the stock has certainly been a much stronger than market stock. This has been a very, very strong stock. And it's a great company, too. I go there all the time. Not to shop, but just to look.
I appreciate the insight.
It's my pleasure, my friend. I don't do stocks often, but I'm always happy to take a look at them. Okay, the next thing that I wanted to mention is get back to the S&P here for a second and talk a little bit about this 786 that's forming on the longer-term picture because that comes in at the 1397 level. It's very important that we hold the 1397 level today or tomorrow because if it is, it's just another correction. And then we will have another potential leg up. But this market from August through September, it stopped right up where we were expecting it to stop, and at that 1460 level, and it looks slower to me. We got a call from Richard in West Palm Beach, the old home of W.D. Gann. Are you there, Richard?
Yeah.
How are you? You live in Gann's old house?
I wish.
What can I do for you, my friend?
RGLD, I have an RGLD. I have the April 1375 put.
Okay, and what is our GLD? I don't know.
Royal Gold.
So it's a gold stock.
Yeah.
Okay. Today it's up pretty good, but and you're in what is your put price?
I have the April 13.75 put.
This thing is trading at $88.
Okay.
But you said you had a 13 put?
April 13th, 75.
Oh, April 13th, 75 put.
Right.
Oh, okay. Yeah, well, I that's plenty of time, and as long as this stock doesn't get above 92, you got a pretty good chance. Watch the gold, because if gold starts to move, and I'm still bullish gold.
Yeah.
If gold gets above $1,800, you're not going to make any money on this one, I don't think. But gold stocks act differently than the gold. So, and believe me, I'm the worst person for puts and calls that you'd ever want to meet.
Right.
So just be careful with it. Above 92, I think you got a problem.
Right. Well, the statistics are saying that it wants to trade down.
Well,
chart.
It's certainly been weaker than gold. There's no question about that. And the good part about this is that fact is, do you go into Tiger TV to look at these charts?
Yeah.
Okay, I'm going to draw in the larger ABCD pattern, and you'll see that the last correction that we had from our previous low stopped just a little below the 50% level, and so as long as if we get below Friday's low, which would be at 85 and change, this thing would really have some downward momentum, in my opinion.
Yeah, I think so.
Yeah, but remember, above 92, you want to protect yourself, because puts, they're called puts because they put it to you, and you don't want to sit there and watch the decay kill you.
Yeah, how is the XEL doing?
XEL is, I don't even know what that is. You'll have to refresh my memory. Is that a energy? XEL?
Yeah, that's Sector S Spider, SPDR, Energy Fund.
Oh, give me the symbol again, please.
XLE.
XLE. All right, let me take a look at that, and we will see what that's. So this has had a pretty good run to the upside. This looks just like a. Well, no, it doesn't either. This is actually made. I have to update this a little bit. We just completing an ABCD. This one looks like it wants to go lower. I think that we're going to make a price of about. Just give me 1 second here to finish the pattern, because it looks like it wants to get down. Oh, I've got a little bit of bad data. Looks like it wants to get down to about 67 is what it looks like.
Yeah, in about a month.
Yeah, I would say about 3 weeks to a month. That's correct.
Yes. Well, I thank you so much.
My pleasure. I hope it helped. I don't do stocks often, but they're not too much different than Forex and the other things anyway, so it's not a problem.
Right.
All right. You live in a beautiful area of the world, by the way. It's really lovely down there.
Thank you.
Okay, thank you. Okay, folks, if you have any questions, it's 877-927-6648. And the next one we want to take a look at is the crude oil market, because we've had some interesting things happening in crude. That was one of my recommendations, for the week, is that if we, had a chance to buy some crude, because we'd had these higher bottoms. And here again, you're going to see a market over the last week. And if you really like patterns, just take a look at this crude oil chart, 30 minutes. Going back to the 24th of August. You've had two perfect AB equals CD patterns that occurred, and the last one occurred at 84.70. The market rallied $2,000. It made another AB CD pattern, and these are the things that we look at each day, and we do these ahead of time, because we're looking to see if we can find places to enter these markets without risking very much. And this is why you go from a daily chart, down to your 30-minute to give you a better indication of what you're trying to do. And our target today in crude oil was 87, and it went to 87.20, and it's now trading $1,000, under that price. So, that gives you a pretty good idea of where you are, with these, futures, commodities, they all do the same thing. The hard part that I have to do, folks, is that, when I'm doing a radio show, I'm a technician, and I really don't follow the news very much. I follow the the weather news because we have friends in the East, and we wanted to know how they were doing and stuff. But as far as how the market responds to it, everybody has an opinion on what's going to happen. Jeremy Siegel today, I believe he's I think he's a Nobel Prize winner from Wharton School of Business, came on today on Bloomberg, and he was talking about the Dow going to 17,000 right after the first of the year, and there's nothing wrong with that. That's his opinion. He's certainly entitled to that. But I would put odds 6-5 that he's never put a trade on. I know he's never day traded. So, and and unless a person really gets their money involved and has skin in the game, it's pretty tough to make a prediction. There was a very famous economist, John Galbraith, and he was a prize-winning economist, and he said that you'll learn more about going short a contract of soybeans than you will in a 1 year of doing an MBA at Harvard. Because if you're in the short soybeans and they happen to be going up or they happen to be going down, you're going to be learning about money management, you're going to be learning about fear, you're going to be learning about greed, and all the things that they don't teach at that university. And that's where, the University of Trading comes in, and the only school that's available there is the University of Hard Knocks. And if you don't get a PhD, you're probably not going to pass the course. And it's much better to learn from someone else's mistakes than to learn from your own mistakes. Unfortunately, I've taken the hard way that way, but I reached the same level. So that's the important thing, is to get to the bottom line. All right, the next one we wanted to look at is the silver market? Oh, someone asked a question about the silver market because it also had made a nice retracement, and we were looking for it to come down to the 382, pretty much what it did. And then if you give me a second here to update this, and I can get it into the Tiger Den, and everybody can take a look at it, because silver is still much weaker than the gold market, but it has a potential to really be big. And the reason why is we've had that triple bottom down at that $26 per ounce level in silver, and that was equivalent to $1,522 an ounce in gold, which was the 618 on the weeklies. And I don't know what the fundamentals are. No one else does either, in my opinion. But this is a lot of support that's happened in gold and silver. If the silver market topped like it did in 1980, it went from $54, back down to $4 an ounce, and it broke very, very quickly. This time, silver went from 49 and only went to 26, so it held up extremely well, and it tested that level 3 times. So both silver and gold are acting like they do want to go higher. We've had higher bottoms. The 382 level has certainly held in the gold. As long as it doesn't go below, 1696, it still looks bullish to me. If we go below 1696, all bets are off. You have to change and revert to the bearish side. That's the bottom line of what you have to do. You have to respect these areas of support and resistance, because they happen so often that they must mean something. That's the bottom line of what we're looking for. We need to take a look at the U.S. dollar index, because I believe that if there's going to be something to make these bonds go crazy, to the
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, and we have a call from Oklahoma City. Steve, are you there?
Yes, Larry. Thanks for taking my call. And
okay, what can I do for you, my friend?
I wanted to talk with you about the lunar cycle. I know it changes from bull to bear market, and I'm a little bit confused about where we are right now. I know we just hit a full moon on Monday.
Well, my assumption was that we were going to bottom on that full moon, and, with the market being closed, it's pretty difficult because that cycle can be as short as, just 2 or 3 days or as long as 8 or 9 days. So I'm as confused as you are. All I know is that we've held the low of 1391, which I believe is that's in the S&P futures, and as long as that low holds up, I still think that it has a little bit more of a chance to rally. So far, we've tested the 61% retracement of that little move that we had over the last few hours, I guess. But I'm confused also. It should have been much stronger move. But longer term, when I look at the divergence between the Dow Jones Transportations and the Dow Jones Industrial Average, I just don't understand how anybody can be bullish stocks. I mean, if that index turns around, then I would say, okay, yeah, there's a possibility. But this thing, it just looks very, very bad in my opinion.
Okay, thank you, Larry. I appreciate it.
I hope it helps. And believe me, sometimes the lunar cycles, when they're making the spikes at the time, would really be nice. But, the 29th, which was Sunday, was the full moon, and then we had the last 2 days we haven't been open, so it's really difficult. But we haven't taken out that low of last Friday, which I assume is the full moon low.
So you think we're still going to take that out?
Well, I think we will take it out. The question is are we going to rally a few more days before we take it out? Yes, I do, because I believe that that the market made a major Fibonacci retracement up there at the 786 at that 1480 level, and we're 80 some points below it, and we've come down very hard. And not only that, but the Apple, which has been what's the biggest stock in the world now. I mean, this stock looks like it wants to make at least 568 a share. It's weaker than the market now. No matter how good the news is on Apple, it's not rallying very much. So I think the bulls are getting tired there. And if you look at the Nasdaq, that's the same thing. That's occurring. But the last week's low is very important, in my opinion.
Okay. Larry, thank you so much. I really appreciate it.
It's my pleasure, my friend, and I hope your team wins the NBA this next year, because I thought they were going to do it this year.
Yeah, boy, aren't they? I tell you, you can't believe the enthusiasm here in Oklahoma City about the Thunder.
Well, we were watching it on TV, and you could see the enthusiasm that was there. Tonight, we're going to the University of Arizona game, Sarah and I. They're ranked number 11, and it's a real event here in Tucson. And so when you get down to the college environment, they've got about 22,000 people will be there yelling and screaming tonight. And we went we usually go to 1 or 2 games a year. And so tonight's the night that we're going to go to see him play. So it's always fun to watch the
Best of luck, Larry.
Hey, thanks a lot, Steve. Thanks for calling in. And I don't know if this is the end of the show. I hear music. I guess it is. Yep. I want it to be the end of the show.